the U.S. economy that are going to impact average Americans in a very profound way and in a very negative way. And it's going to be way worse than, how things were during the 2008 financial crisis, just about a full percentage point. Looks like we close around 97.4. The U.S. dollar is about 0.5% away from a new all-time record low. Trump basically waved a flag, which is what I said on my podcast, and started the race to get out of the dollar. Is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. Now, bad things are going to happen to people that own Bitcoin. They're going to lose all their money, but that's not what I'm talking about. I'm talking about much more significant bad things in the U.S. economy that are going to impact average Americans in a very profound way and in a very negative way. And it's going to be way worse than, how things were during the 2008 financial crisis or during the COVID pandemic. I mean, the COVID pandemic, yes, it was, a pain in the ass because you couldn't go to restaurants, you couldn't travel. But remember, people had it pretty good during the pandemic. They didn't have to work. They could stay home. A lot of people just stopped paying their rent. They didn't have to make payments on their student loans. They got all this money coming in from the government. And they went on Amazon and they shopped and they bought things. And yeah, I mean, people did go to, parties and they found ways, to entertain themselves, despite all the masking and the stigma of going out. But people generally had a good time during COVID. Kids didn't have to go to school, right? Teachers didn't have to work and go to school, right? But what's about to happen is going to be significantly worse because even if you get a check from the government, it's not going to buy you very much. That is the problem. We are on the verge of a massive collapse in the dollar. In fact,
Peter is making a terrifying distinction here. In 2008 and 2020, the government bailed everyone out with printed money. But this time, that printed money is the cause of the crisis. It's not just a recession, it's a currency collapse. If you want to know how to protect your purchasing power before it's too late, make sure to like this video and subscribe to our channel right now.
The dollar really tanked today. The dollar index dropped to its lowest level since October, right? Dollar index was down just about a full percentage point. Looks like we close around 97.4. The US dollar is about 0.5% away from a new all-time record low in the Swiss franc. And I believe we're going to crash through that next week. This is a sign. The world is losing confidence in the US dollar and they are buying the Swiss franc. Now, obviously, they're buying gold even more than the Swiss franc. And now they're buying silver. That's also helping to power commodities. Oil was up almost $2 a barrel today. Many of the oil stocks are at new 52-week highs today. They are forward-looking. I've been saying on my regular podcast for months now, oil is bottoming. In fact, we couldn't go significantly below 60, even on the Venezuela news. And even with all this new Venezuela oil being dumped on the market by Trump, prices held. And we're about to explode. And it's not just oil prices that are going to go way up. It's going to be agricultural commodities. This is a huge commodity bull market. All of this, of course, is going to bleed into consumer prices. But not only is it going to force consumer prices that are already high and moving higher, but they're going to go up even faster. But it's also going to put upward pressure on long-term interest rates, which are also rising. Yields on the 10-year and the 30-year treasuries are now back above where they were before the Fed cut rates by 75 basis points. But we're going a lot higher. And one of the reasons for this is Donald Trump and the speech that he just gave at Davos. And I spoke quite a bit about that on my podcast that I recorded yesterday. And it's an hour-long podcast, so I said a lot, and I don't want to just repeat everything. So once again, I'm going to say that if you're watching this podcast, when you're finished, go and watch the last podcast I did on my main channel, my main YouTube channel, Peter Schiff, and listen to that one, right? Oh, and by the way, make sure to subscribe to this channel if you're not currently a subscriber. Like the video, comment on the video. And the only thing that you might want to do before you go watch my podcast, the other podcast, is go to Schiff Gold and buy yourself some gold or silver. Now, gold might be the better buy here, right? Because you can still buy it below 5,000. And I assume that if you watch this video on Friday night or on Saturday morning, Saturday afternoon, you could still buy gold for under $5,000. If you wait until Monday, that may no longer be possible. We could be quite a bit higher. Than 5,000 even. I'd be 5,000 something. But, now you know why I have been, pounding the table, my desk here, so aggressively. It's not that I'm just trying to sell you gold and silver. Sure, I want you to buy gold and silver. But, I don't need you guys to buy gold and silver. I got plenty myself. I got plenty of gold stocks. The reason I've been so aggressive is because I knew this was going to happen. What is happening right now, the type of move that we're seeing in gold and silver, this does not surprise me. I've been waiting for this. I've been predicting this. What surprises me is that it took so long to start. I was doing some research, and I'm going to put these clips up probably next week. These are interviews that I did on CNBC back when they still had me on, when I was forecasting $5,000 gold, and they were giving me a lot of shit, right? Because like the first time I made a $5,000 gold forecast on CNBC, gold was about $1,700. And then a couple of years later, it's down to $1,200. And they're bringing me on, and they're playing the clips of my $5,000 forecast. And they're saying, Peter, you were wrong. You see, you were so wrong. How could you be so wrong? And then people were saying, I shouldn't be recommending gold. This is at $1,200 now because it's gone down. You're losing people money. People could be in the stock market, but they're listening to you and they're buying gold, and you should be ashamed of yourself. And you're just trying to sell gold, and you're screwing people over because you're talking them out of the stock market. And you're getting them to buy gold. And I'm like, yeah. And they should buy more now at $1,200. And if you look, and I'm going to put this video up next week, but you can see the price of the S&P, and you can see the $1,200 price of gold. Well, since that show, gold has outperformed the S&P. So people who did exactly what I was suggesting made more money. Yes, the stock market went up, right? And I agreed that it was going to go up. I just said that gold and silver would go up more, where I was talking specifically about gold, not silver. But I said gold would go up more than the stock market, and they laughed at me. They made fun of me. They said I should be ashamed of myself, for trying to con the public into buying gold. Well, they're better off, right? The people who are worse off are the ones who bought the S&P. Now, of course, yes, buying the S&P was better than just sitting in cash, and I acknowledged during these interviews that the Dow would go up, the S&P would go up. I wasn't telling people to short it. I just said that in real terms, priced in gold, it was going to go down. So why not just own gold? Which worked out. But, they just made fun of me.
This is the point most investors miss. The stock market is at all-time highs in nominal dollars, but when you price the S&P 500 in gold, the market has actually been flat or down for over a decade. You aren't getting richer in the stock market. Your currency is just getting weaker.
They had no idea because I knew this was going to happen. And the reasons that I gave for why I believe gold was going to go to 5,000, that's exactly why it's going there. But that's also exactly why it's going much higher. But, because over these last 12 years, and I back then I didn't expect it to take 12 years, and I thought it would have happened sooner. But because it's taken so long, all the problems have got worse. We got way more debt now than we had back then. This is a much bigger bubble. We've printed way more money. And so 5,000 is nothing compared to where we're ultimately headed in the price of gold. But the point is that, these guys were all over me for making a prediction that turned out to be accurate. Yes, it took longer than I expected, but even though it did, if you bought gold back then and waited it out, you're still better off than the S&P 500. But of course, if you bought more, along the way and kept buying, and the same thing is going to happen with Bitcoin. I mean, these guys made fun of me because I missed Bitcoin on the way up. I did. I missed it on the way up, but I'm also missing it on the way down, right? They're going to catch it on the way down. I think the majority of people who made money in Bitcoin are going to end up losing money in Bitcoin because they didn't sell. The ones that got in really early and cashed out, yes, they're going to go home winners. But the vast majority are going to go home losers. In fact, Bitcoin was the best performing investment when hardly anybody owned it. But, the minute Wall Street embraced it, 2021, and, they started launching ETFs and stuff like that, from its November 2021 high, Bitcoin is now down more than 50% priced in gold. More than 50%. So people who sold their gold to buy Bitcoin ETFs have lost a tremendous amount of money. Even though Bitcoin has gone up from then, it's gone up a lot less than gold. But soon it's going to actually be lower than it was back then. Bitcoin was 69,000 at a peak. And now, it's above it. It's, 90,000 or something like that. But it's going a lot lower than 69,000 very soon. In fact, right now it's at 89,440. So the same people that made fun of me, for my advice against Bitcoin, they're going to have to eat those words as well. Of course, CNBC, they don't even have me on anymore, so they don't have to deal with it. They don't have to apologize. In fact, I was watching today, some people come up and they talk about gold. Although, interestingly enough, the lady that was interviewing this guy who was talking about gold, she kept saying, but you wouldn't say buy it now, right? I mean, wouldn't you tell people to wait for a pullback because it's gone up so much? Like, I never see them say that about the stock market. Like, well, you wouldn't tell people to buy the stock market now, right? It's just gone up so much. Shouldn't they wait for a pullback? No, they never talk about waiting for a pullback when it comes to tech stocks. But no, don't buy gold. You better wait for a pullback. Look, yes, it's better if you could buy a pullback, but what if it doesn't pull back? I mean, if I didn't own any gold or silver right now, I would be buying it today, right? I mean, shame on me for not owning it and letting it go up this high without buying it. But, you can't just keep waiting for a pullback that may never come. Or if it comes, you won't be quick enough to snap it up, or you'll be waiting for a bigger pullback and you'll miss out, right? So, but the interesting thing is she was so skeptical. But they didn't give this guy who was bullish. He was talking about the story of de-dollarization and central banks getting out of dollars and getting into gold. They didn't give him shit for it. They didn't make fun of him. They didn't, like they used to do for me. So at least they're taking people seriously now when they mention it. But they should have taken me seriously. Again, the first time I was on CNBC with Mark Haynes, and I've talked about this clip, I went on, and gold was, $300, $400, something like that, $400. And I came back a few months later and it was $450. And I said, look, gold's up $50 since the last time I was in the studio. And then Mark Haynes says, who cares? Why should I care about the price of gold? What difference does it make? Yes, he's the anchor on a financial news station, and he doesn't care about gold, which is the most important financial commodity that there is. And of course, had people just bought gold the very day that Mark Haynes said he didn't care about it, they would have beat all the things he did care about. The stock market, which he cared so much about, was outperformed by gold. Yet he didn't give a damn about the price of gold. Now, I told him, I said, well, you should care about it, and one day you will care about it. Now, unfortunately, he passed away, so maybe he never cared about it, and so he didn't live long enough to care about it. But obviously, some of the people at CNBC are going to start caring about it eventually. But everybody should have been caring about it all along. But what's happening right now is a warning. And, what Donald Trump said in front of the whole world, and he didn't just say it in front of the world, he said it in Europe, in Switzerland, right? Where the dollar is about to crash to a new all-time record low against the Swiss franc. And he talked negatively about Switzerland as if, the only reason the Swiss economy works is because of America. Right? But if America wasn't here buying their watches and buying their chocolates or buying their pharmaceuticals, they'd have no country. Right? This is what this guy actually believes, right? And he told everybody in Europe that Europe is nothing without America. Canada is nothing without America. We make the whole world work. Well, Trump is about to find out the hard way that that's not the case. Because if I was, a central banker or a leader in any of these countries, I would be like, what the hell? Are you kidding me? And I would be, you know what? We are just yanking, the rug out from under this. We are not going to subsidize your economy anymore. We are selling our dollars. We are selling our treasuries. You think we need you, right? We're better off without you. And they are better off without us, right? They're better off consuming what they produce, not giving it to us. They're better off investing their savings productively, not loaning it to us so that we can squander it on consumption and government. So Trump basically waved a flag, which is what I said on my podcast, and started the race to get out of the dollar. That's what I said. That's what I titled my podcast. And that's exactly what happened today. The race is on, right? And,
This is a geopolitical game changer. By openly insulting allies like Switzerland and Europe, Trump hasn't made America stronger. He has accelerated the world's exit from the dollar. When your friends stop buying your debt, interest rates explode, and the game is over.
This is going to be a marathon, right? There's a long way to go. And gold and silver have been rising even with a stable dollar. But now that the dollar is not stable, now that the dollar is falling, gold and silver prices can rise even faster because now they've got, this tailwind coming from a weakening dollar. This is also, again, strengthening all the commodities. You're going to see that more in energy, in agriculture. That's going to be very problematic because what has Trump been, kind of hanging his hat on to claim that we have no inflation? Oil prices, $1.99 gasoline, which I guess there's some gas station somewhere in the world that's selling gas at $1.99. I've never seen it, but apparently Donald Trump knows where it is. But he's talking about these low gas prices. Gas prices are going to be going up. In fact, natural gas prices were up like 70% this week because of the storm that's coming through. But the fact that they can move like that is an indication of what could be happening in the energy sector. But today was also a big oil rally. But that is going to completely, let the air out of that balloon. And the one thing that Trump has had to claim, we have low inflation, is going to go away. But of course, he'll come up with some other lies to try to talk about how strong the economy is as it's imploding. But this is a huge game changer, right? The monetary order is being changed. We are leaving the U.S. dollar standard exactly as I've been forecasting that we would, right? When Nixon took us off the gold standard, right, the world continued to accept the dollar as the reserve, despite the fact that it was no longer backed by and redeemable in gold, which was the only reason it became the reserve currency. It was because we had so much gold that Bretton Woods agreement, we were able to have the dollar as the reserve currency. But we went off the gold standard, but the world continued to accept the dollar as if it were still backed by gold. Well, the significance of what's happening now is that the world is now going off the dollar standard. They should have done it back in 1971, but they didn't. And that's what enabled over 50 years of this, service sector bubble economy to be created, where we will able to live beyond our means, consuming what we don't produce, borrowing what we don't save, thanks to the reserve status of a fiat currency that we created out of thin air. And Trump just went around the world telling everybody how they're nothing and we're everything and we're the greatest country and we're the strongest country and we have this huge military. And, I was thinking about invading Greenland and taking it over. But, I'm a nice guy, so I won't do it. But I could do it if I wanted to, and I may do it. You never know, right? And the only reason that we're in a position to do this is because the world pays for it. See, Donald Trump thinks America pays for everything. He keeps talking about how the rest of the world doesn't pay its fair share and we're covering all the costs. Well, where do they think America is getting its money? It's borrowing it from the very nations that he accuses of not paying their fair share. We're borrowing a fortune from Europe. We're borrowing a fortune from South America. We're buying it from Asia. We've borrowed a lot of money from Japan. They're about to be cashing that in. The Japanese, I think, are about to be selling a lot of U.S. treasuries to pay down their own debt because their debt is getting a lot more expensive now with yields surging in Japan. So this is a very significant event that is taking place. Very few people seem to appreciate the gravity of what's going on. I mean, yes, you're seeing it now in the gold and silver market, but most people don't get what it means, right? But they're buying now, and they're starting to buy, and money is starting to move in to gold and silver mining stocks. This is just the beginning, right? Because most investors have zero exposure, right? Now, in a few years, I think just about every institutional investor, all the pension funds, all the endowments, all the mutual funds, they're all going to have allocations to precious metals, whether it's some physical precious metals, mining stocks. Everyone's going to have it, because if you don't have it, you're going to underperform, right? Nobody wants to go out on a limb like I do and be the first one to buy these stocks, right? Because if they don't work out, right, they look like a fool and they get fired, right? But what happens is once these stocks start performing, then if you don't buy them, you look like a fool and you get fired. So there's going to be all sorts of pressure on money managers to start allocating towards gold and silver, towards mining stocks, and get into foreign stocks and get out of the dollar.
Think about the math here. Currently, less than 0.5% of global pension funds are invested in gold. As Schiff predicts, when these trillion-dollar funds are forced to enter this tiny market just to survive, the price of gold and silver won't just double, it could multiply exponentially.
But what's going to happen, and this is an important point that you got to grasp, because we're headed for a crisis. Worse than 2008 for America, right? The 2008 crisis is called the global financial crisis, right? This crisis that's coming is not going to be global. It's going to be American. Now, the 2008 financial crisis was made in America, right? But the problem was we had exported all of our bad mortgages all around the world. So when the mortgages went bad, foreign creditors that owned those mortgages also had losses. But what created more problems for the global economy was that when the financial crisis hit, the dollar was at an all-time record low, and it had a big rise. And that rising dollar, right, was a big problem for the rest of the world. This is going to be the opposite of that. This crisis is a dollar crisis, and it's hitting when the dollar is relatively high and has a long way to drop. Now, it's already dropped against the Swiss franc, but if you look at a lot of other currencies, the dollar is still high compared to where it was in 2008. And as the dollar falls, that's going to be a big positive for the rest of the world. Meanwhile, the bonds that are going to be crashing now are treasuries, and there isn't default risk there. See, there was default risk in mortgage bonds. There isn't really going to be default risk in treasury bonds. There's just going to be inflation risk. And so foreign central banks and foreign holders of our currency are just going to sell these bonds. The Fed's going to buy them if nobody else wants to. And if the bonds mature, well, they get their dollars. They get paid, right? The government's going to pay. And then they take those dollars and they're going to sell them into the market. And so this is a U.S. financial crisis. For the rest of the world, there's going to be a boom. It's going to be a bust in America and a boom, particularly in the BRIC nations, the emerging market economies that have been shouldering the lion's share of the burden of supporting the U.S. consumer, right? They're going to be relieved of that burden. They're going to see the value of their savings and their paychecks go way up, which means the cost of all the goods that they buy are going to go way down, and consumption is going to go way up outside the United States as it implodes. You know, a lot of people, when I talk about how we're going to have this massive recession, depression, and rising prices, They don't understand how that's possible because they'll think, well, if demand is so low, how can prices go up? And my response is because demand is not going to be low all over the world. Demand is going to go up in other countries, right? It's going to go down here because as the dollar tanks and foreign currencies rise, right? Prices go down in other countries. Things get cheaper. And so demand goes up, right? You demand more when the price is lower. And so people outside the United States are going to consume a lot more. So that means there's going to be a lot less available for Americans, right? We're not going to be importing as much stuff because it's going to be too expensive. So yes, Americans are going to buy a lot less stuff, but the stuff they do buy is going to cost a lot more, right? And so you can still have a lot of unemployed people, a weak economy, but everything you want to buy is very expensive because you're competing with people all around the world who are now richer because you're poor. Your purchasing power that you lost was gained by somebody else, right? Because all the goods still get produced. What determines who gets to consume them are exchange rates, right? And that is the subsidy that America has enjoyed at the expense of the rest of the world. So it's not going to be global.
This is the harsh reality check. For 50 years, Americans consumed while the world produced. Now that cycle is reversing. As the dollar crashes, the American standard of living will plummet, and the developing world will finally consume their own products. The era of the American subsidy is officially dead.
Other than the fact that it's going to be good for the global economy, they're going to be stronger without having to pull us all this dead weight around, right? That is what Americans are going to learn that lesson the hard way. Trump's going to learn that lesson the hard way. Unfortunately, Trump's still going to be rich, right? He's still got a lot of money regardless of this. But a lot of Americans who were Trump supporters are going to really feel the pinch. You know, Trump goes around, you know, he was bragging about no tax on tips, no tax on overtime, no tax on Social Security, as if this was a good economic policy. That is just Keynesian stimulus. That is, trying to create demand in the economy when the problem is supply. Just, increasing the budget deficits so that you can give out tax cuts to people who will go spend the money is bad economic policy. But he's bragging about it as if he actually delivered relief to people. He's not. All that's going to do is drive up the cost of living. It's all inflationary. So all the people that Trump is promising to help are going to be harmed by the very policies that he claims are helping them. So it's all going to blow back. Prices are going to go through the roof. Maybe Trump is going to send out these tariff dividend checks, which are really not tariff dividends because he's giving the money to the people who paid the tax.